Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
Welcome back, ladies and gentlemen, to the Family Banking Show. We're your hosts, Derek, Rob, and John. Guys, how's it going this week?
Great. So we are September 25th, 2024, and this is a classic Indian summer in Minnesota. So what's it, 70 something, 80 something today?
Yeah.
Just perfect fall weather, and it's about to get even better. Cool down a little bit. Mornings are crisp. I love these Indian summer days of the year.
It was a perfect evening for me. I was taking my kids on a walk.
Yeah.
And this was just like 2 or 3 hours ago. And then boom, just two bees just came darting at me and got a couple stings on my right ear. So if you're watching on YouTube, you'll probably see, a little bit of red, but I'm good and happy to be here. It's been a great day. And like Rob's saying, it's just beautiful here in Minnesota in the fall.
Yeah. John, were you pushing any kids in a stroller?
Nope, they were just running around.
Did you just grab them and sprint, or what happened?
It just came out of nowhere. I was chasing my kids. They're not very fast, so I was just kind of doing a little half jog, and out of nowhere, just hear the buzzing in my ear, and then just see two little bees drop off. Wow. They did their life's work, I guess.
Ouch.
Well, glad you guys are doing good apart from the bee stings.
Yeah.
It's a great time to be in Minnesota. I'm excited for the leaves to start changing a little bit more.
Mm-hmm.
But I do hate the winters. So I'll take this weather any day.
Mm-hmm.
Well, guys, in this episode, we are, of course, continuing in our Becoming Your Own Banker series by our Nelson Nash. And we're talking about, I think, our favorite topic as the family bankers. We're on page 71 and 72 of his book, and it's titled An Even Distribution of Age Classes. And before we get into the specifics that we want to spend much of our time on, I'm just going to give a brief synopsis of this section here, or at least an introduction to our conversation. So Nelson was a forester. So his profession was to manage forests for either private landowners or public landowners, and manage them for income oftentimes. And so when you are growing trees as your crop, think of it like corn or soybeans, but you're doing it over many, many years because it takes a long time for a tree to grow. And so in order to maintain steady cash flow for that property, you might only harvest some of those trees, maybe 10 or 100 acres at a time, depending on how big of your property you have. And then you would move around your property in succession until you have harvested all of the property. But each time that you take a select crop or a select harvest, then you would plant more trees that would then come up. So the whole idea is, instead of doing a clear cut where you cut down every tree at one time, you're doing small sections in order to maintain a steady income stream for that landowner. How does that relate, or how does that apply to infinite banking and this topic of using whole life insurance as a place to store and protect your wealth? Well, this is what we're going to do. We're going to illustrate or document for you, encourage you to think about doing this over many generations. So an instance would be my parents, and then me as a second generation, and my children as a third generation, and my grandkids as a fourth generation. If each generation is continuing to practice becoming their own banker and purchasing more life insurance, we're able to pass on that family wealth to the next generation by doing it this way. It's one of my favorite topics to talk about. I know you guys are really into this as well. How would you like to start our conversation off?
Yeah, this is what changed it for me. Reading this, I'm not a very emotional guy, but I was just thinking about at the time, a 6-month-old and a 1-year-old. and thinking about how this can bless my children. And then just to even wrap my mind around, someday grandchildren, great grandchildren, and knowing that it can all be done with just a slight change in behavior, really.
Right.
It's not a huge, millions of dollars that you're trying to put towards this one thing that hopefully will, build Rockefeller type of wealth. Like, it's just a slight change in your cash flow that you have access to, just like any other IBC policy, that can bless like multiple generations. And as soon as I saw this, I think many people in the IBC community will say that infinite banking is caught, not taught. And this is where I just caught it. And my eyes were open and I just saw the impact that this will have for many generations to come. And that's my passion, is just to see families specifically. It's why we're called the Family Banking Show. Bless their children, bless their children's children. That's that first verse on page 71 that says Proverbs 13:22, a good man leaves an inheritance for his children's children, excuse me. And that's exactly what we're trying to fulfill and steward what we are able to have, in our lifetimes, not just for our own enjoyment, but to really bless, all the generations to come. So this was a huge topic for me when I came across it. My eyes were just open, the light bulbs were going off, and I just, immediately called my wife in. I was like, you have to read this, these 2 pages at least, and consider how powerful this is going to be for our family.
Yeah, John, I'll add on to that. You reminded me of a kind of that verse that you mentioned in Proverbs. A good man leaves an inheritance for his children's children, Proverbs 13:22. That reminded me of like so I have a wonderful mother and father, wonderful family, but grew up way up in northern Michigan, up in the Upper Peninsula, up at the tip, and real hardworking, individualistic families, and just like you're never expected to ever get any help. It's just like it's not even part of your consciousness that you're just expected to make your own way in life, and you're on your own. And it's just we don't even question it. And it's even like one of my dad's kind of jokes growing throughout life was, he's like, if I retire with 1 penny left, it's a mismanagement of funds. And I just thought, I always laugh. I just thought it was super funny. I thought that was like funny. And it never dawned on me until this book, actually. Like, I don't think that's the right perspective. Like, that culture is so used to, like, when you're raised, it's a hardworking lifestyle, and you get up and you go to work from as soon as you can basically get up and work, you're working. You're on the farm, you're working, and when you're old enough, you're out the door, don't let the door hit you in the butt. Basically, you're on your own. Good luck. The family network is really strong up there, obviously. I mean, maybe it's not obviously, but it is. It's despite what I'm saying, the family networks are very strong. Everyone supports each other. Like, people will take their shirt off their back to help each other out there. But it's like this mindset, like, you're on your own when you're 18 and you're out the door. Good luck. Man, I didn't know I didn't know there was a different way than that. And this, like, what if you could just do as a father, if you could just do the same thing that you were doing anyway, and you could bless your children.
Yeah.
And it's not, so they don't have to, it's a cycle of resetting from nothing. You walk out the door, you got nothing, you have to build up everything. Your children go out the door with nothing, they have to rebuild everything. No one has taught them that it doesn't have to be that way. It can be help teach your children, and then by doing just the same thing you do anyway, by saving money, but doing it in a whole life policy, you can bless the next generation and the next generation, so they can start out ahead, and it can just be a bigger blessing from generation to generation to generation. So that's why I just love this section so much. It's such an eye opener that it doesn't have to be that way, that every generation has to start from zero.
Mm-hmm.
Have a long-term plan, teach your children right, and then leave an inheritance for your children and your children's children. I mean, what a blessing that is to your family.
Yeah, awesome word, and a good example of, you know, where you've come from and how things are changing, you know. And oftentimes I have that same conversation with other Christians, other individuals, just in general, of like, why would I want to make my kids entitled, or, you know, why would I want trust fund babies or anything like that? You know, that's a common misconception of like, well, money's just a tool. It's how you prepare your children to utilize the tool. That's the hard work.
Right.
You know, leaving an inheritance can be quite simple, even though today many people feel like, oh, I don't have enough money to leave an inheritance, or it's not going to be much, or maybe it's just going to be the house, you know, or whatever my possessions are when they go to sell it at an estate sale. Well, if you think broader than that and think long-term, long range, like Rob has said, we can demonstrate for you that it's really quite simple, and you're getting so many benefits along the way, and those benefits are being passed on to future generations to make sure that they're not starting from zero, which is a great way to think about it. So guys, here in the book, Nelson kind of gives a demonstration of how this works in practice. And it's not a one size fits all, but he's giving an example here of how the first generation, whoever that is, maybe it's you, maybe it was your parents, the first generation is going to purchase not only insurance on themselves, but also start a policy for either the second or the third generation, which would be their grandkids. And then as time goes on, then the second generation, which might be you in this case, would purchase maybe a policy on yourself, own that yourself, and also start a policy on the fourth generation. And so this is just kind of leapfrogging along in the timeline. And this could go on for eternity, as long as whole life insurance continues, right? So this is a way, as we've said, a place to store, protect wealth, maintain the great tax-deferred benefits, the tax-free death benefit. And that brings up a great point, that you can use the death benefit to start these policies, and could potentially only use the death benefit to fund the policies from one generation to the next. So guys, what are some other key takeaways here? Things that people should be thinking of? How else might you explain this to our listeners?
One thing that I've been talking to a couple people recently about is the comparison to, in my opinion, the narrow approach of a 529 college savings plan.
Yeah.
And that if someone, literally this morning, I talked to someone and his goal was $75,000 to contribute towards their children's college. And the best way they knew about doing it was a 529 plan. Showing them how you can direct less cash flow to a whole life policy for your child, have full liquidity, guarantees involved, this be something that benefits them over their lifetime, plus have that 75,000 that they can use in a much more advantageous manner, was just a no-brainer. Like it just blew the 529 out of the water. And along the way, like also in addition to the child policy, there were tons of other protections involved that set that child up for success entering their adult life, where, you know, the cheesy phrase is my ceiling is going to be my child's floor, where truly like that contributes to that idea where they're starting out, just like Rob was saying, way ahead. And I think, you know, an important consideration is comparing, the 529 to this strategy that can give you just far more different opportunities. And the 529, what if your child decides to just be an entrepreneur and just start their own business?
Yeah.
What if there's college isn't right for them? All sorts of contingencies that can happen. That is a big deal if you have an accumulated 529, but it isn't a big deal at all, really, for, if they went a different path.
Yeah, and the beauty of it is all along the way, because they've got access to that cash value, they can teach those children the ability of what it looks like to become your own banker, own that banking function. So, John, to your point, if they wanted to be an entrepreneur, say at age 12, maybe you've got a son that wants to start mowing lawns in the neighborhood and they need a lawnmower, right? Well, you could take that policy loan out, show your son, hey, we're going to use this to purchase you a lawnmower. And as your business is generating income, you're going to pay that policy loan back. And so that way, when you do, if you do decide to go to college, because maybe that's still the intent of the parent, they could have access to those funds fully. Meanwhile, they've also learned great entrepreneurial skills along the way. And if they decide to not go to college, they still could use that capital to maybe start another business or a larger business or expand their business. So a lot of potential there for just utilizing whole life compared to the 529.
Yeah, and I just think that's part of our, people just don't know that there's an option other than a 529 plan, so that's part of our mission. The Family Banking Show is to just educate people that you do have an option, because people just don't know, that's even about whole life insurance. People don't understand what it is. They don't know what it is. No one's taught them. How do people know if no one tells them?
Yeah.
And that's what we're doing.
What I love so much about this idea is the fact that you get to live your inheritance. So even though maybe you're thinking of that tax-free death benefit as an inheritance, obviously to leave to your children or grandchildren, but all along the way, because you've got access to the cash value, you can demonstrate, you can live it out and teach the next generation how to be an entrepreneur, how to invest wisely, how to save. All of these things along the way, you get to live that while you're still alive. It's not just, oh, I pass away, now all of a sudden you get this large lump sum of money. It's being able to incrementally train the next generation on how to utilize these dollars and steward them well. I love that. Being able to live the inheritance, practice what you preach now before you pass away. And that's what's going to help protect your family and your children from squandering the wealth, is by being able to live it out and demonstrate it today, not just when you pass away and it's written in your will or in your trust on what to do.
Yeah, because that's embodying the opposite of money being our master. In fact, we're making money serve our values, right?
Right.
Like, if you're able to model that over your whole adult life and your children's childhood, and they see that, like, what an amazing gift that you can give. That's not money at all. It's just the concept of not serving money. And whether we like it or not, we have to deal with money in our society, buying things. Like, in order to live, we have to have money of some sort. So if we're going to encounter it, why not have a healthy approach to it, teach our kids and grandkids how to, control the banking equation, like we've talked about in previous episodes, but also just control the idea that it's not going to cause your children to be a prodigal son and, end up among swine. Like, it can be something that, there's a really, really helpful book that I found clarified on a practical level. It's called What Would the Billionaires Do? That's what it's called now. It used to be called What Would the Rockefellers Do? By a couple of just geniuses, Garrett Gunderson and Mike Isom. And they talk about how the Rockefellers have been doing this for many generations. They perpetuate their wealth, and they're also one of the greatest givers. As a family, their philanthropic, the amount that they've given has just been far beyond what any of those single individuals along the family could have otherwise, contributed in their lifetime. Mm-hmm. And what's the main engine for it all? Dividend paying whole life insurance. And they, have mastered that. And, the book I think is fascinating where they compare it to the Vanderbilts and their family, how within 3 generations, there wasn't a single person in that family worth more than $1 million. And many people ended up on the streets, homeless, like in that family. So just seeing the comparison, it's not a matter of if you're starting out wealthy, it's a matter of if you can transfer values and wealth in a really wise manner with the tools that we have available.
Mm-hmm. Yeah, well said.
Great point.
What are some of the advantages that Nelson describes here towards the end of this section? And why would you want to start a policy on, say, just the youngest generation? Why do it that way?
Well, if you go to the first bullet, he says it covers multiple generations. It promotes long-range planning. Isn't that one of the very first things that Nelson says in this book is think long-term? And so that starting with that younger generation, there's that intent from the very beginning that this is a long-term process, long-range planning. And that just gets instilled in the process. And it's part of that education process that John was talking about. And you, Derek, I think that's such an important thing, even like when we're trying to talk to our clients, getting them to think 30 years in the future, 50 years in the future. It's just, we're not used to thinking like that. We're so used to the immediate. And especially when we can show some of these illustrations and run some numbers through like the truth concepts calculators or things like that, where it shows the impact of compounding over 30, 40, 50 years, the impact of not paying taxes on your growth over 30, 40, 50 years. It just really is, that's the secret sauce to it, is this long range thinking. So it's such an important concept, that first step of thinking long range.
Yeah, and on a practical level, the application for a 0-year-old, I think it's 6 days is the earliest you could start that application.
Yeah.
Where if that's the first thing on your mind, then kudos to you, but otherwise take care of your babies and enjoy the newborn stage. But the underwriting and the application is super simple, right? There's no different health ratings. There's just one standard rating, unless there are health concerns, which heaven forbid that's actually like a part of your baby's life. But generally people develop health issues as they get older. And that's where, for adult whole life policies, there's different health ratings that we don't have to really concern ourselves with for a newborn application. It's very quick, it's very simple, it's very easy. And the adult, the parent most likely, or the grandparent, is still the owner and the payer of that policy. So it's not like we're expecting a 6-day-old to come up with the cash to pay these policies. This is still in control by the parents or grandparents their entire childhood. That, like Derek was saying, if they're 12 and want to start a little, lawn mowing gig, then go for it. And they can be the banker for their children and really, execute those strategies. So that's a huge advantage of starting early, is you're way less likely to have any complications in the application or underwriting.
Right. And one of my favorite things that Nelson describes here is that when death does occur and the life insurance policy pays out the tax-free death benefit, you can use that, as we've already described, to start the next successive generation and keep the wealth transfer going, so that no one is starting from zero. And we're going to look at an example in a few minutes as to what that looks like and try to give some even current numbers to how that might be playing out. But so this is a great component to add to your family wealth plan, your estate plan. Right now it's very tax favored, which is why so many people do appreciate this. And it's generally the wealthy, the ones that have this accumulation, that want to pass it on to the next generation. But you don't have to start wealthy to do this. I mean, when we got married, I think we had like $7,000 in our bank account. It was not much, and we inherited a lot of student loan debt, if you know what I mean. So it was, but we started, we knew that this was the place that we wanted to store and protect and grow our wealth. And so this is not something that you have to be a millionaire to do. This is something that anyone can do. Start it on yourself. And then as you've maximized your own insurance capacity, then move on to the next generation as your dollars allow for it. Nelson also says that this is a great place to have some assurance of passive income when that time comes for that generation. And it's not just in the sense of you could be taking the death benefit, or I'm sorry, the dividends from the insurance company or even a policy loan as your source of income, but you could write the loan to that second or third generation who is maybe a little bit more in tune, more risk-taking, and wants to see, your money grow as well. So you could be writing a safe loan to them. They could be paying you interest, which would then fund your retirement or your passive income years. Meanwhile, they're able to use their skills to grow that and build something for themselves as well. So just an example of how do you get that passive income when you need it? How does the next generation learn how to manage that wealth wisely and build something for themselves as well, and pass along the values to do it in a wise manner? What else are you guys thinking of, like key takeaways here towards the end of this episode?
I think just to add on to the family banking show, like if you truly set this process in place, you can achieve a family banking system. And like what Derek alluded to, if you are the owner of the policies, you have children and grandchildren, they can come to the family bank when they need loans.
Yeah.
And so, you would charge an interest rate just like you would from any other bank. You need to be an honest banker. But the interest that you are gaining from that, the older generation, like Derek said, could supplement their income. And at the same time, the policies are still growing and accelerating. So it can be this way that you can insulate your family from the banking systems of the world by creating your own family banking system. It just takes that first generation that has the wisdom to start this process, and then it can just continue to bless generation after generation after generation, not just with the death benefit that gets passed down, but you have a banking system with a lot of cash value in it that accumulates very quickly, that the whole family can benefit from. And you can instill this whole process of banking within the family, teaching that to your children and grandchildren and great-grandchildren. It's just this opportunity to bless generations. And it just, like Derek said, doesn't have to start with much, and we all didn't start with much, but it just builds up. The days are long, but the years are short. Like it adds up quickly. Just start. What they say, the best day to plant a tree was 20 years ago. That's the same with the life insurance policy. The best day to start it is 20 years ago, but if you can't, start it now. And then you can start building that process. Just think long-term, think generationally. It'll be a blessing for many generations.
Yeah, and I'll just add a couple points. The first one I'll add is to address the illustration itself on this topic in the book on page 73 and 74. The numbers will be different. I'll just upfront rip the Band-Aid and say the numbers will be different. If you would like to see what it would look like, I'm fully transparent in any personal calls. Like I've already shown like my children's policies to anyone who asks, and we're all three of us are just open books, and we'd be happy to share that with you, or we can see what that would look like for your children. So the numbers, I think many people have said it before. I think we've said it in a past episode. If you get the concept, the numbers don't matter. If you don't get the concept, the numbers don't matter. So as a former engineer, that still pricks me, but that's still true. So that's what I'll say about the illustration and the numbers. If you'd like to talk more specifically, we'd be more than happy to. And then the second thing I'll say that is perhaps a little off topic, but I think definitely hones in on kind of my passion in addition to the family side of things, is, I'm technically first generation American. My father immigrated from Cuba, and I grew up in South Texas, and I saw the Hispanic community, which is over half of the San Antonio population is Hispanic, not have much financial literacy really at all, and most certainly not know about infinite banking or whole life insurance. I think real estate was this general like facade of like generational wealth. Like if you could just get real estate, then you'll have generational wealth. Like that's what we see other people do. And, unfortunately, there's tons of rough history in our country's past that has restricted minorities from having real estate. And that's awful. And I think that's absolutely something to lament. But when thinking about generational wealth and securing like a guaranteed generational wealth, my brother-in-law is African American, and that's one of his like absolute passions is setting up for his kids and grandkids a perpetual system like we're talking about, which he just started his IBC policy and he's just so excited. But understanding that it doesn't necessarily have to be real estate. Like real estate's, it has served my family well, and it's definitely a great asset to have. But why not like day one guarantee that you're going to win? Like day one guarantee that your family, white, black, Hispanic, no matter who you are, you're going to have generational wealth. And through whole life, it just happens to be tax-free and just lots of other benefits to it that we really enjoy. You don't have to worry about, this maybe a weighty topic of real estate, of the history behind that or whatever. It's just guaranteeing yourself, generational wealth. So I think that's really powerful for me, coming from a background that has zero really financial literacy and seeing a community of Hispanics specifically, like wanting something but not having the tools. And this is a tool that absolutely will guarantee that for you, no matter who you are. But specifically in my background was in the Hispanic community. So that's a huge passion of ours, is just helping people have the right tools to achieve what they want. Like we're not trying to sell you a product. In fact, we're probably like helping people sell their goals and achieve their goals. And we're just that coach, that advocate to help you get there. So there's my soapbox. I'll let y'all finish it out, but it's just a huge, huge benefit to this strategy.
Well,
Yeah.
Go ahead.
Yeah, I'll just add on, John, like that's similar to what I talked about my upbringing in Northern Michigan. Like it's just really hardworking people, but no one taught us anything. And that's kind of where my heart is at, is if no one tells you what to do, you don't know. Right. And this book is what opened my eyes to what the possibilities of the potential of whole life is, dividend paying whole life. It's just something that I didn't know. Like, I'm 50 years old, and it's like no one told me. How did I learn this at my age? Why didn't I learn this when I was in high school, or why didn't someone teach me this? It's just that really drew me in. That's I think that's what drew us all in. Is we're not sales guys. I'm an engineer. John's an engineer. Derek's in the construction industry. But we're drawn by this passion to teach people and coach people about how this can help your family, help you out, help your children, your grandchildren, your great grandchildren. It's a passion. So yeah, totally with you, John. Totally feel you in terms of people just do what they've been told or learned, and no one's out there teaching them anything. And that's where our heart is at. So I'm with you.
I like the way that Nelson ends this section. He says that money won't buy happiness, but poor stewardship of money will steal happiness. So by not managing our finances wisely, by not training the next generation on how to manage finances wisely, we're stealing potential joy from future generations. So with that cheery note, why don't we go ahead? We'll take a look at some modern examples here and this is just one example as to how this could work in practice. All right, so here we have what I call the legacy bank, or you could call it family banking, where we're going to look at 3 generations, a grandpa, a dad, and then the kids in the 3rd generation. So first of all, the grandpa, he's starting at age 60. And I did this intentionally because I want people to see that you don't have to be 20, 30, 40 years old to start becoming your own banker. You can start this well into even his retirement or passive income years as a way to transfer wealth to that next generation. So in the example here, we're taking a look at, he's paying a premium of $20,000 a year, and he passes away at age 80. So he's paid in total over 20 years, he's paid a cumulative premium of $400,000, but that tax-free death benefit was $734,000. What do we do with that $734,000? Well, that becomes the seed capital for the 2nd generation, or for the dad. He's starting at age 55, once again, late, relatively later in life, or at least his prime income earning years, where he's using that $734 tax-free death benefit to fund his policy, and that's going to fund it for 7 years. So for the first 7 years of this policy, he's not having to come out of pocket and pay any premium. But then in year 8 and on, he's going to pay $36,000 a year. And why that number? Well, I'm accounting for some inflation. $36,000 a year is going to feel roughly equivalent to $20,000 a year for the grandpa as if you take the time value of money and establish a inflation rate on that. So dad is also going to pass away at age 80. His cumulative out-of-pocket premium was $828,000, and it then established a tax-free death benefit of over $4.5 million. And once again, we're going to use that death benefit to jumpstart the next generation, the kids. And now they've grown up. They're at age 55 as well. And they're going to use that $4.5 million to fund a policy for the first 10 years now. Then their out-of-pocket premium is going to drop down to $77,000 a year. Once again, just accounting for the time value of money and an inflation rate. So it feels relatively the same as it did for the first generation as, what is that quote unquote cost of their insurance? And then that generation passes away at age 80, and their out-of-pocket cumulative premium was over $1.5 million. And that generated a tax-free death benefit of over $20 million. And this could continue on in perpetuity, keep funding, keep jumpstarting that next generation. So as a total group across 3 generations, the total out-of-pocket premium that they paid was $2.77 million. But the total death benefit was over $20 million. Just think about that. That's what, a 7x, almost 8x multiplier on their premium dollars that they have paid into the policy. And all along the way, they've had $14 million of cash value to utilize to start businesses, to expand businesses, to pay down debts, to recapture interest that they were paying to third-party banks. You name it. They could use that cash value for nearly anything. But of course, there's always that inflation, or I call it a silent tax. And so let's take a look at the effects of inflation over these 3 generations. Well, if we were to assume a 3% flat inflation, which of course we know is false, but we have to assume something. If we assume 3% flat inflation for these 80 years or across these 3 generations, and then we took those dollars and brought them to present today. What's the dollar worth today? So remember, they paid over $2.7 million in premium. But if we bring that to today's dollar value, that would be an equivalent of almost $759,000. If we took the guaranteed death benefit across those 3 generations, that would be worth in today's dollar over $1.1 million. If we took the non-guaranteed death benefit and brought that to today's value, that would be an equivalent of $1.9 million. So think about that. If somebody handed you, or if you went to the bank and you wanted to hand them $759,000, but you're expecting the bank to give you over $1.9 million back, who wouldn't do it?
Right.
This is the power of storing, protecting, growing wealth, becoming your own banker inside dividend paying whole life insurance. When you think of it across many generations and think of it with that long range thinking. How do you turn $759,000 today into $1.9 million today? But this actually required 80 years of planning and thinking and being committed across these 3 generations to represent that type of wealth. Just to summarize, they paid $2.7 million in cumulative premium, but they got $20 million of tax-free death benefit. That's truly powerful. That's true wealth building, in my opinion.
Right. Yeah, so true, Derek. And like you said, they could use that cash value through that whole 80 years to do all those fund the things of life. Your need for your cash while you're living is greater than your need for death benefit, at the end, as Nelson says. And you can just leverage that as becoming your own family bank, the Family Banking Show, creating your own family banking system. And you can benefit all your generations and leverage it at the same time and not have to go outside. You can keep it all within the family. It's such a powerful concept.
Well, guys, I hope, I know we've enjoyed this episode. I hope our listeners have enjoyed it. If this is something that you want to start today and get the ball rolling, become your own banker and do this for the future generations, you can certainly reach out to us at thefamilybankingshow@gmail.com, and we would be thrilled to demonstrate what this could look like for you and for your family. Guys, we'll see you in the next episode.
See you guys.
Thanks.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.